Today is Wednesday, August 7th. We are now live with the latest in the crypto world. It's 9:30 a.m. in New York City, 2:30 p.m. in London, 10:30 p.m. in Tokyo, and 3:30 p.m. here in Malta. Jason Fernandez and Jose Maria Macedo will share their expert opinion with us on today's show. But first, let's take a quick look at some of the market indicators. The cryptocurrency index, CCI 30, has slipped slightly below the 4,000-point mark. The index is up by 2.5% so far in August. Its gain measures at 80% year to date. The 30-day Bitcoin volatility index increased above the 5% level yesterday. It remains at a relatively low level when compared with mid-July. Trading activity has slowed down slightly, and the 24-hour traded volume indicator has declined towards the $60 billion territory. The Messari website's real-time volume measures at close to $2.75 billion. The Bitcoin dominance indicator has remained at more than 68% during most of the past 24 hours. The top 5 digital assets are all trading in the red today. Bitcoin is down by 5% as it has retreated below the $12,000 level. Ether has moved south of the $230 level. XRP has found support at the 31-cent mark. Bitcoin Cash holds on to the 4th spot by market capitalization as it stabilized above the $330 level. Litecoin has moved further south of the $100 mark. The Coin 360 heat map showcases the bearish mood that we are seeing on the markets today. There is, of course, plenty of red here. According to the token spread website, the Kraken and CEX exchanges have the biggest arbitrage for the Bitcoin dollar pair, and it is just 0.3%. The XMO marketplace has the maximum spread, and it is 0.15%. We continue looking at the characteristics of various cryptocurrency projects, and today it is time for Get Thief. This is a universal gifting protocol for global content creators. It utilizes the blockchain technology to create a decentralized ecosystem where a community can create and curate virtual gifts. The Gifto token was created for users to purchase virtual gifts that can then be sent to content creators. The token hit its all-time high of slightly more than $1 in January of last year. Currently, the digital asset trades at just slightly more than 2 cents. We will now review the performance of various cryptocurrency asset classes as grouped by the Messari website. The infrastructure group is down by more than 3% as assets are trading in the red across the board. The media and entertainment category posts a drop of nearly 3.7%. This is despite Decentraland's Mana token trading up by nearly 10%. The financial sector has declined by 2.4%, and there's plenty of red on this chart. The currency category is the most bearish asset class today with a drop of 3.7%. And lastly, the services section stands nearly 2.3% in the red. The Huobi token bucks the generally bearish mood with a slight increase here. This is, of course, where the 5 major cryptocurrency categories stand so far this Wednesday. We will now move on to provide you with an overview of the most significant moves among the top 100 cryptocurrencies, and then we'll be back with our crypto experts after this short break, so do not go anywhere.
180 different countries all around the world, which makes us grow in like a sphere.
We are stronger than ever.
Have these questions answered without disclosing anything.
AI field is mostly controlled by a few large corporations.
Much busier, bigger than ever.
In the mid-2020s. I do think that will come.
We should kind of keep in mind that we want the world to be a better place.
$15 billion a day. This is incredible.
People find a way to create infrastructure.
I think knowledge is one of the most important things in the world.
We laid the foundation for the distributed trust model that Satoshi builds on.
It does come with some risks, but at the same time, I think it's an opportunity for countries.
Individuals miss the boat on a market, they miss the boat. When the institutions miss the boat, they bring the boat back.
This is Blocks Live TV.
We are back to discuss the latest on the markets with our experts, Jason Fernandez, COO and co-founder of AE Token, and Jose Maria Macedo, head of advisory at Amazic. Guys, great to have you both. How are you doing today?
Excellent. Hi, Leo.
Very good. Thanks, Pat.
Good. Lots to discuss. So, Jason, I want to come to you first because one of the top stories of the day is, of course, still developing. There is a Telegram group where someone is posting what appears to be Binance KYC images. The exchange has come out with an announcement where it says that there are some inconsistencies between these images and the data in their system. The CEO of Binance, Changpeng Zhao, has described this as an attempt to spread FUD. So, Jason, what are your thoughts on this for us, please?
Okay, so the first thing is that the Telegram group that you're referring to has actually been pulled down. The other thing is that they're saying it's FUD, but to me it sounds like there's some smoke there, because at the same time they're also saying we are still investigating this case for legitimacy and relevancy. Essentially what they're saying is that some individual contacted them and threatened and harassed them, essentially asking for 300 Bitcoin in exchange for them withholding something like 10,000 photos that Binance says bear a similarity to Binance KYC data. And to me, that sounds like a really odd phrase. What does bear a similarity to Binance KYC data mean? It sounds like it either is or is not. And apparently, if one were to review the leaked images, they're all from a time in February 2018 when Binance had contracted with a third-party vendor for this KYC verification in order to handle sort of the high volume of requests that they had at the time. And essentially, Binance is saying that they're doing further investigations with their third-party vendor. But that sort of implies that something actually did happen, right? That at least that there was a leak, that there was not only that there was a leak, but that there was a leak perhaps from a third-party vendor. And finally, the whole point about them saying that there's inconsistency between these images and the data in their system, that doesn't seem too strange for me, because KYC data would be typically when somebody signed up. And their current data, that they might have from today might be significantly different in various different phone numbers and different numbers that they might have. So that doesn't seem to me to be justification that there wasn't a leak. One of their points is that it did not have the Binance sort of digital signature on this document, but certainly having supposedly there were several images of people kind of holding a sign with their passport and a sign saying Binance, which is basically how one has to do KYC for Binance. So it seems really strange that these would be, they're not likely to be made up images. So it sounds like there's a leak. So it can't be fear, uncertainty, doubt if there's truth to it.
Okay, so really for you, Jason, it seems, there's no smoke without fire. You're finding some of these, the phrasing similarities just slightly suspicious. So interesting there. Jose, we will come to you. Are you equally not as convinced, just like Jason isn't?
To be honest, I'm not too much of an expert on this, but I think Jason covered it pretty well. The images were first leaked in February 2018, and I think the exchanges have been blackmailed about them before. And what they've said in the past, which was accepted by the community, is that their data and their images has a specific watermark on it that is undetectable to anyone but them, and that these images they've been given doesn't have that watermark on them, or don't have that watermark on them, which indicates to them that it was either a third-party leak or otherwise phishing attack or something of that sort. So difficult to say at this point whether it was a hack or not. One thing that is clear is that centralized storage of data will always lead to these problems. So until we have a better solution and until we value our data more highly, which might take a few years, these things will keep happening.
Okay, but definitely an interesting point there about the watermark, as you mentioned. Let's just move on to market performance. Bitcoin has had a bullish week. It rose above the 10K level and then marched on to break through 12K resistance level. It has, of course, currently given up some of the gains to slip back below this level. So we will come and back to you, Jason. What is your take on these moves?
So last week when I was on the show, I think it was hovering around 9,500, and Pascal Van Knife had sort of pointed out that some analysts were predicting a move, perhaps as low as down to 5,000, and there were discussions. It's 8,600 and 7,600, and these sort of numbers would probably be a possible move down. Possibly be legitimate numbers that Bitcoin could move down to. I thought actually that it would go up. And since then we've seen it, but particularly I thought it would go up, particularly because we've seen a lot of support in the mid 9,000s. So I think we saw it right just past 12K yesterday. Then it slid back down because apparently some traders took some profits, pushed it back to like 11,800. Now it's at 11,600. But I think it will inch back up. In the short term, overall I'm bullish on Bitcoin, right? I've been bullish on Bitcoin since 2013. I expect it will easily surpass its all-time high soon. That's from a long-term perspective. In the short term, what you typically don't want to see is some sort of parabolic rise that goes on for a while without a period of at least a short time where it's trading sideways, at least for a little while, because generally parabolic rises are followed by pretty deep pullbacks right after. So this would be exactly the way you would like to see Bitcoin rise, sort of slow and steady all the way up, going up to its all-time high and then surpassing it eventually.
Absolutely. We're often kind of talking about, I think, that rubber band theory, that elastic theory. So definitely some healthy pullbacks are required there. Jose, I will just come to you. Would you like to add anything just on this point?
Yeah, definitely. I think it's been an interesting sort of period for Bitcoin at a fundamental level as well and at a macro level. I think we're seeing sort of a perfect storm of macro conditions come together to make the case for Bitcoin as strong as it's ever been, in my opinion. So, Bitcoin as an asset is a very interesting asset because it's a risk asset, it's a technology, it's a venture type investment, but actually its addressable market and its vision is to become a safe haven asset. So it sort of straddles between those two roles. And what we're seeing is both its risk asset portion and its safe haven portion being benefited by current macro conditions. So, in terms of risk assets, people just don't know where to put their money right now. You have equity valuations at the highest ever since other than 1999 and 1929, with the Shiller PE ratios and stuff showing the highest price to earnings multiples that we've had in a while. We have 13 trillions of government bonds yielding negative interest rates, so where you're actually paying the government to keep your money for you. In terms of emerging markets, we have China with banks starting to show signs of failure. We have trade wars. We have Hong Kong situation going on. Globally, we've got 240 trillion worth of debt, 300% of GDP. So people don't know how governments are going to be able to pay this. Probably they're going to have to print in order to do this, which may or may not destroy the value of their own currency. So currencies aren't an option. And then you have a situation where sort of global economic growth has been trending lower for decades as advanced economies are facing demographic headwinds, right? Like an aging workforce, slowing population growth. IMF recently adjusted down their estimates for the global economy. So all this has led to the Fed actually dropping rates for the first time in over a decade. This was something that was sort of impossible to conceive a few years ago by analysts, but now it's happening, and there's also a 90% chance priced in by the futures market that there will be a future another 50 basis points cut this year. So all this is pushing investors further and further out on the risk curve. Their opportunities for assets to invest in are dwindling, and they're being pushed further out on the risk curve where Bitcoin obviously benefits from. And then as a safe haven, you have to ask, all this global debt, all the macro situation that's happening with the trade wars with Hong Kong, people are looking, there's capital flight coming out of Hong Kong, people are looking for a safe haven. And then when the Fed cuts rates, obviously the first order thinking is to think, all right, the Fed cut rates, the discount rate on assets, it's going to make more credit in the economy, which is going to boost asset prices. But the second order thinking is, why is the Fed cutting rates? And the answer, of course, is that they're anticipating economic weakness, or they're seeing it taking place, and they want to ward it off, right? So it's kind of like if you go to the doctor and you ask him how you're doing, and he pulls out a big hypodermic needle, and you interpret that as a good thing, the Fed's cutting rates for a reason, and it's because it believes the economy is weak. So all this, plus Hong Kong, plus capital flight, plus the Chinese yuan falling below the 7 threshold, people accusing them of devaluation. I think all this presents sort of a perfect storm for Bitcoin, both as a risk asset and as a safe haven asset.
Absolutely. This is something that we are constantly, actually recently, this last week, to be honest, been discussing on the program, how geopolitics really is coming into play here. Jason, we will come back to you. The Bitcoin dominance indicator is approaching the 70% territory. So do you see that the dominance of the crypto king will actually continue to increase, and what are the reasons behind this?
Yeah, I think so, at least in the near term. I think it's clear that new money is entering the system. We know that just in terms of the new number of new account signups that Coinbase has been adding over the past several months. Anthony Pompliano was recently on television talking about how Bitcoin has sort of proven itself to be a sort of safe haven asset, or at least a non-collateralized asset that doesn't move in lockstep with traditional financial markets. And so for a lot of people, particularly in times of sort of financial uncertainty, where you're seeing with the yuan, and you're seeing with the sort of trade war fears in China, of course, as Jose pointed out, you have Hong Kong, and you have sort of all these macro issues sort of happening together. That's sort of what is pushing Bitcoin to such heights. And right now, alts are just not performing at the price, at the the way that Bitcoin is. And so, given the choice, when people are moving their money, where they're trying to sort of move it into a safe haven asset, they're certainly not going to put it into alts. They're looking into sort of Bitcoin, moving their money into Bitcoin for now. Another thing is that Litecoin is due for a dump soon, and if not already. And I think Bitcoin would be the primary gainer there too, because essentially when people are looking for something safe, at least in cryptocurrency, that's always sort of been Bitcoin.
Absolutely, and we have seen that social media campaign, which really just started that comparison between Bitcoin and gold. So really just kind of promoting Bitcoin as that safe haven asset. So absolutely new money coming in. Jose, we will come back to you. Your thoughts on this?
Yeah, I would agree with Jason there, but I think it's worth remembering that we're still very, very early here. The internet was invented in 1983. www was only invented in 1989. So I think I always say we're in the equivalent of 1994 of the internet. So to give some perspective, sort of in 1994, Amazon had just been founded. Apple was worth $4 billion rather than $1 trillion, and Google didn't even exist yet. So a lot of the big stuff that's going to be built with this technology is still yet to exist. That said, I think Bitcoin is obviously the market leader right now, and it's the digital asset that possesses the most well-defined and also the most well-understood narrative, that of digital gold, as you've been describing. And I think one of the reasons for that is that the narrative of digital gold doesn't actually require much technological innovation. It only requires reasonable scalability, and then most of it is built on belief. I think it's super important that this narrative is established first, because this is kind of the base layer narrative that will underlie everything else. People need to have belief in digital scarcity before Web3 and open finance can really take off. So I think, given the macro trends I just described, I think over the next cycle, Bitcoin's likely to lead. But I'm not a maximalist. It's important to sort of see what's happening elsewhere. And I wouldn't be here if I thought this was just digital gold. It's a very interesting revolutionary thing, but I don't think it's everything this industry is going to bring. And we're seeing that with open finance, right? Ethereum's Chris Berniski just tweeted out that Ethereum's on-chain transaction volumes surpassed Venmo's total payment volume in Q2 2019. We have 600 million locked in DeFi now as well. We had Uniswap and all these open finance protocols taking off. And at the same time, we have a lot of innovation happening in Web3 under the hood. So I think these are the things that we have to keep an eye on, and that we'll see emerge probably over the next 2 or 3 cycles.
Those numbers that you mentioned there, you know, when you take us back to the 90s, it really does just put all of this into perspective, I guess. Like you say, you know, there really is just more to come. So we will just move on now to look at the drivers. So Jason, we'll come back to you. One of the drivers for Bitcoin dominance is the regulatory issues that initial coin offerings are facing. The Canadian messenger app startup Kik is in a lawsuit with the SEC. They are now fighting back with a 100+ page response. So, Jay, do you see this ending in a positive way for Kik? And what would this actually mean for the industry as a whole?
So I sympathize with Kik, and I think, you know, it's always great when somebody tries to do something innovative. But the facts as laid out by the SEC, at least, just don't look really good for Kik. One of their points, the SEC's contention is sort of that at a Bitcoin meetup in 2017, the Kik CEO said that the company had set aside some kin for itself. Kin is obviously the cryptocurrency that is what they called it, and that they were committed to increasing its value based on the fact that they own some, that they were obviously had an interest in raising the value. That sounds like something that you'd want to buy now and hold while the value goes up, and that's practically the definition of a security. And that's sort of what they're saying is he was sort of implying that this would be something that one could invest in and get a return. If you actually look at their response, they again, they don't really do a really good job of contesting a lot of what the SEC says. They do sort of go point by point, and one of their points that I think that they have a fair argument on is that the SEC has sort of said in their initial filing that Kik's consultants had warned them that it was potentially a security. But if you actually look at the whole quote of that the consultant, you know, had used, apparently it was taken out of context, and that the quote actually is that the company had good basis to argue that it was not a security. Because they're essentially just selling units of a property that are used for a particular purpose within the app. So if you actually look at the full contents of this context of the statement, it actually supports what Kik was saying. So like I said, it's sort of overall, if what the SEC says is to be believed, it doesn't look too good for Kik. But Kik, at least in their response, has sort of fired back and said, at least in some cases, that the SEC has sort of they've sort of credibly made the argument that the SEC has overstated their case and taken sentences out of context. They certainly made that argument credibly. Now the question would be whether who prevails, whether it's the SEC or Kik. But if the SEC, what the SEC says is accurate, then it doesn't look good for Kik. But the question is whether it's accurate in the first place.
Okay, so we'll have to just wait and see, like you said, whether it is accurate, then we can work out how Kik is going to fare in this. So, Jose, we will come back to you. Your thoughts for us?
Yeah, this is super important. But whatever happens, this will be incredibly important for the industry, you know, because the biggest dampener to innovation, obviously sort of bad regulation is one, but another one is the lack of clarity. And I think what we have in the US now is a huge lack of clarity in terms of how the Howey test is being interpreted and applied. And I think the Kik lawyers and Kik itself made that point very well. You know, the Howey test has sort of the four prongs. Again, I'm not a lawyer, so take all this with a grain of salt, but it has the four prongs of investment of money in a common enterprise with the expectation of profit from the efforts of others. Sorry, and I think obviously the expectation of profit. I think given Kik's public announcements that they've contested that a bit, but it's likely that most people investing in an ICO are doing so with the expectation of profits. But that in itself doesn't make something a security, right? The expectations of profits have to derive from the efforts of others. And I think that's where blockchain and truly decentralized projects have a real argument to make in terms of the Howey test, in that is the value created actually being generated from the effort of an identifiable group of others, you know? And I think the SEC has already opened up a precedent that a project can become what they call sufficiently decentralized, that's not the case, and in which case it's not a security. And I think Kik will also be trying to make that argument, you know, that the price of Kik isn't reliant just on the price of kin, isn't reliant just on the efforts of Kik, but also on the third-party developers, on the apps that are built on it, on people using those apps. So it's more of an ecosystem rather than a security in the traditional sense. I think that's really important to remember, because otherwise things like a lottery ticket would also count as a security, right? Because you're still buying it with the expectation of profits, but it's just not from the efforts of identifiable others. So it'll be really interesting to see how this case progresses and and what the precedent is that's created here. And it'll be really important for crypto, but also for crypto in the US.
Okay, Jose, thank you for your thoughts there. Now, just finally, because we are unfortunately pushed for time, I just want to move on. The US Federal Reserve announced earlier this week their plans to develop a real-time payment service called FedNow. So is this a threat for cryptocurrencies in general and for the ones that are aiming at actually improving bank transfers in particular? Jason, of course, we'll come back to you.
So I don't think it's a threat. I think that the Fed has basically said that they're not looking to displace or directly compete with the various private sector companies that are sort of attaching or sort of proliferating within the space. But what they're trying to do is leverage their pre-existing inbuilt connections to something like 10,000 US banks to create sort of a service that would not be possible in any scale if one were to be done, sort of by the private sector. They wouldn't be done in any reasonable time scale. So instead, the goal of the Fed now is sort of to serve as a infrastructural platform upon which the private sector can build. So the idea is this is supposed to support the private sector's various attempts at, things like Ripple and things like Stella. So this is supposed to support that idea. And the concept behind that is because the 2 or 3 day window which usually exists between the time money is deposited or transferred and when it's available for use typically affects low-income Americans living paycheck to paycheck much more than those on a fixed income. So basically, all those people on a fixed income. So it's sort of really important for these people to sort of get their money on time, and so they've sort of been pretty clear about not trying to compete. And this is something that was needed. I think something like out of the 350 comments that were received on the subject of faster payment service. Basically were received on the subject of faster payment services from something like 800 organizations that have basically written into the Fed. So something like 90% of them said that they wanted the Federal Reserve to operate a real-time payment service. So it was something that was needed or people wanted, and it's something that the private sector can't do, and that's something that is necessary because the Fed can't do something that the private sector can reasonably do, and so the argument is that the private sector can't reasonably do this.
Jason, as always, thank you very much for your thoughts. Jose, just finally, quite briefly for us, let's hear your thoughts.
I mean, I think Jason covered that pretty well. I do think it is a competitor because anytime sort of the traditional financial system is improving its outdated processes, it's sort of making the pain of using it less, which is one of the reasons for blockchain and all this financial technology to exist. And I think they have been improving that quite a bit over the last few years, probably as a response to the financial technology and blockchain that has existed. But yeah, Jason covered it pretty well.
Jose, Jason, as always, thank you so much. It's been an absolute pleasure having both of you on the program with us today. Thank you.
Thanks very much.
Now, before we sign off, I do have a last-minute update from our editorial staff regarding the crypto market. The total market capitalization has edged higher to approach the $310 billion mark. Trading has slowed down. The coin market cap website's daily traded volume has slipped to less than $60 billion. Bitcoin trades slightly in the green, but it is still south of the $12,000 mark. Well, that is all for this Wednesday's Crypto Now live show. We thank Jason Fernandez and Jose Maria Macedo for their expert analysis. We thank the audience for joining us and invite you all to accompany us every weekday at the same time.